What's going on, everyone? Welcome to another episode of The Remote Real Estate Investor. I'm Michael Album, and today with me, I have Matt Faircloth, author, podcast speaker, co-founder, president, investor, syndicator. He does a lot, and we're going to hear a ton from Matt about what he's been doing in the real estate space and what he's currently putting together and actually closing on today. So let's get into it. Matt Faircloth, thank you so much for coming on the show today. Really appreciate you taking the time to hang out with me.
Michael, I appreciate your time and having me on your show, man. Thank you.
Absolutely. So I know a little bit about you, but I would love if you could share with our listeners who maybe have never heard of you, if they've been living under a rock for the last couple of years, who you are, where you come from, and what you're doing in real estate.
Nice. Where'd you come from? That's great. That'd be great if that was an introduction to meet people. Like, where'd you come from, man? It's cool. Matt Faircloth, my company's called the DeRosa Group, and I just love saying this, that we're a company dedicated to transforming lives through real estate, transforming lives through real estate. We can get into that in the show if you like. Where I came from, let's see. I grew up in Baltimore, bopped around the East Coast for a minute. Before I landed in Philly, met the woman of my dreams because she put Rich Dad Poor Dad in my hand when we were still dating. It got me to read that, and that got me to drink the entrepreneur Kool-Aid, which I guzzled and quit my job in 2005 to start a real estate company. Bumped into a lot of walls. Did a lot of it, made a lot of mistakes, made some money, and then just built it and grew over time, and just learned how to run an effective real estate company through the School of Hard Knocks. And now I've been doing it for 16 years and just applied what I've learned over the years. Attracted more and more of the right people to work with me, and built what I think to be a phenomenal brand now.
Oh, that's awesome, man. That's awesome. You've said that once or twice before, I can tell. It just rolled off your tongue there so nicely.
This is not my first podcast, Michael. Like, sometimes people ask me, let's just get real. Screw it, man. Let's you and I get real right now. Right?
Let's do it.
What I go on a lot of podcasts, and when you go on a lot of podcasts, people tend to ask the same questions, Michael. Right? Yes. And so when they do, it's almost like I'm that guy. I'm the DJ singing a DJ booth, and in the DJ booth of Matt's brain. And then people ask, like, "Hey, Matt, tell me about your first deal." And I'm like, "Okay, let's get the first deal track. Pull the first deal track out. Plug that in. Yeah. Right. Go pull the file of first deal. Right. Tell us about the first time that you raised money. Tell us about a mistake you made. Okay, let's go. That's good. Let's go pull that mistake file in. Okay, let's pull that file out. Right. So it's more fun to go curveball. Like, where are you from? Yeah, that was a good curveball in the first 5 seconds of the show that you and I went down, right? You end up, you can't help it. You end up just going to a script. A lot of times you end up talking about things on podcasts over and over and over again. It's not that I want to be plastic like that, but you end up like, if I've told that story 6 times, the 7th time it starts to come off the same way over and over again, right?
Well, I totally get it. Well, and I hope that today is not one of those repetitive podcasts.
You're getting it not to be that show already, man. You're curveballing me. I love it. Keep it up.
Well, as a follow-up, Matt, what's your favorite mammal, man?
That's a good one. Okay. Growing up, I have an 8-year-old, right? So my 8-year-old is always, "Daddy, who would win?" I wish he was here, because me and him would have a ball right now. "Daddy, who would win in a battle? A colossal squid or a great white shark?" And I'm like, "Son, well, first of all, like, but he'll even be like, a gorilla or a colossal squid." I'm like, "Gorilla's gonna drown, buddy."
Yeah, right. On land or
Where
the
is
ocean?
This battle?
Yeah.
Give me the data. Give me more data, son. At what depth are we talking about in the ocean? Are we 10 feet in the ocean, or are we talking about like 3,000 feet down? Right? To answer your question, I probably would go a gorilla if I had to pick, or maybe, I don't know why, but growing up, I love Black Panthers.
Ooh, okay. Pretty majestic animals.
Yeah, I don't know why. I don't know. They're majestic. They are majestic animals.
Yeah.
So those would be my favorite. Those are probably my 2 favorite mammals.
I love it. Well, so real quick tangent, because we're already down this rabbit hole. You know that there was a show put on by, I think, Nat Geo or Discovery that answered your son's questions. They would pit these 2 animals together in a simulation. Like, that exists.
Oh, yeah. You could Google it.
You could Google it.
And they would show, because he would be like, Daddy, who would win a saltwater? It's just, you can Google saltwater crocodile versus great white shark.
I saw that episode. Yeah.
I know, it's good. It's like, oh shit, who's gonna win? Someone's gonna put a bet on it, right? You know, and they do a good job displaying. Well, you see, the saltwater croc would try and take the on a death roll, and this would do that, and the great white would. Oh, he was my son's itch was scratched with that, you know. But then he wants to. I don't know why he's obsessed with Komodo dragons. Komodo dragon versus anything you can name. That's what he wants to talk about. Yeah.
That's a battle royale of the century.
It really is.
Oh my God, I love it.
Komodo dragons are badasses, man.
They're
Komodo
crazy.
dragons are like they are.
Well, it's like the kiss of death.
They have a venomous bite. Did you know that?
Yeah, it's a kiss of death. Yeah.
It is. Not only are they monstrous lizards, like little dinosaurs, but they also have a venomous bite, you know?
That's such a ridiculous concept. Like, oh, let's take two of like humans' worst fears, like long-tailed, long-tongued lizards, and then give it venom. Oh, sounds awesome.
Right. Give it nasty teeth.
Yeah.
Like a really weird, awful roar, and we're going to give it venom too. Right.
Oh my God, so good.
They are nasty creatures, man. Good thing they don't make them in North America.
I know.
You know?
I'm stoked.
I know.
All right.
Yeah.
Well, if we bring it slightly back towards the real estate genre.
If you want. If you want, man.
I feel like we could do a whole podcast on mammals and Komodo dragons. So you started a company, a real estate company in 2005. And when people hear that, I think it might be ominous to some people of, you know, what does a real estate company mean? And so what was the transition like? I mean, like, what does the DeRosa Group do first and foremost? And then what was that transition like going from just owning stuff on your own to now I have a business focusing on it?
That's interesting. You know, that, man, interesting concept, because a lot of people out there are running real estate investing like it's a gig, you know? Like, it's like driving Uber, you know, like you could just decide to not do it at some point, you know? I mean, it's not a gig. It's a business. Real estate investing is a business because it's a marathon. Unless you're wholesaling or just doing a deal here and there or something like that, not for nothing, this business, the business of real estate investing is a business, and you should treat it as such. We didn't always do that. In the first couple of years, I treated it like a hobby, and I bumped into walls and did a bunch of different things. But like, once I really got my legs underneath me as a real estate investor and really found the calling, found the purpose, and got focused on real estate investing, I got clear that it's a business that is like a living animal. It's a living thing. It needs
a living Komodo dragon.
Was that like a Komodo dragon?
It's a living Komodo dragon.
Real estate investing is like a Komodo dragon, right? It needs food, you know. It can have a venomous bite. It can be nasty as shit and bite the fuck out of you, and a lot of people are scared of it, you know. Right? Yeah. You know, people write bad articles about it. It only exists in certain places. We can keep going, right?
This is so good.
But it is something that needs, you know, if you want to grow a real estate investing business and sustain yourself in this industry and not just make it a hobby, you have to have a company that's got, you know, clean books and has a purpose and has a mission and has roles and responsibilities and job descriptions and stuff like that, because there's sucky things in real estate you have to do. And it's like, well, you know, and you could look on Instagram, and if you look on Instagram for real estate investing, people think that it either means you close deals every day, because every time people close stuff, they put it on Instagram, or they go to, it's like, Instagram thinks that for real estate investors, all you do is close deals, go to conferences, and go on vacation. That's it.
And drive Ferraris.
Because that's all you see people doing on Instagram that are real estate investing, right? But there's actually like this sucky part of real estate investing, which is sitting on your desk and answering emails and, you know, and just corresponding and looking for deals and swinging and missing and dealing with knucklehead tenants and stuff like that want to, you know. Recently, Michael, we had a tenant, had his girlfriend come in. He must have done something bad, because she went, put all his clothes on his bed, dumped gasoline on the bed, lit it on fire, walked out. This is my world.
Mic drop.
This is what happens. That's real stuff.
Oh,
so you gotta deal with that. Who wants to deal with that? You know? Right? That didn't make it to Instagram, unfortunately. You know?
No. That wasn't the highlight reel?
No, not highlight reel. living my best life. Look at me as a real estate investor.
Charred walls.
On my way to the conference, on my way to the beach. oh no, wait a minute.
Well, so you bring up a really great point, Matt, in that it should be treated like a business. And I wholeheartedly agree. But so what about all the people out there that are just getting started that could never see themselves as a business owner, as an entrepreneur, but hear about real estate investing as a great side gig, like you mentioned?
Yeah.
What about all those folks? Where are they left in this?
Okay. They need to decide if they want to do it full time or not. Right. And there are people out there that have a day job that they love, and it's probably something that's very fulfilling to them, or maybe they went to school for a little long time, like a doctor or an MD or whatever. I mean, geez, those folks go to school, God bless them, for like another 12 years after they get out of college, right? So why would they change careers, right? There are people that really, in their heart of hearts, probably ought to go passive for real estate investing as a side gig and as a way to build their wealth. And there are people that are doing it because they want to build up the passive income and become a business owner out of it. So you got to choose if you want to be an investor or let's remember Robert Kiyosaki's cash flow quadrant book, right?
Yeah.
Okay. ESBI. Remember that thing?
Mm-hmm.
Okay. Do you want to be a B or an I? B, business owner, I, investor. And if you're willing to put in your time and quit your day job eventually and become a business owner, then that's what you need to do. But unfortunately, a lot of people misunderstood Kiyosaki to think that to be a real estate investor, you have to be an active operator. You have to do it full time. You can make the passive income all you want as an I quadrant investor and just passively invest in things. And I think it's probably the most misunderstood function in a lot of his books. People that have quit their job that really should have never done that. They should have just passively invested their way to financial freedom.
Yeah. Okay. And let's talk about that for a minute, because you wrote a book about raising capital. And I think capital is so often the biggest obstacle for people, the biggest hurdle for people to overcome. So do you see kind of this roadmap for people where if passivity really time is the goal, right? That's what everybody is after. And we get there by either usually being a B or an I. By being a B, that sounds terrible. Don't be a B.
Why you gotta be a B, man?
Yeah. Right. So if people are capital is their obstacle, using real estate as a active vehicle to then take a back seat and invest passively.
Yeah, well, my book talks about that. And then it goes back to, let's just keep walking on the B and I road, right? So if you're a B quadrant business owner or a rising B quadrant business owner for real estate, and you either want to do it full time or you already are doing it full time, then at some point, unless you win the lottery or unless you just got a silver spoon in your mouth and you got billions of dollars waiting on the sidelines from your friends, from your family or something like that, you're going to need capital, right? You're going to run out, man. You are. And so on the other side of it, you've got I quadrant investors that have either retirement accounts, real estate equity, cash, any of those things that they want to put to work and not have to put in the time to make that money do what it's supposed to do. Then those two can marry up. The B quadrant business owner of real estate versus the I quadrant investor that wants to make a return on their money without trading that money for time. Those two can have a really happy partnership. And my book talks about how those two things can get structured together. In my book, I call it the cash provider. That's the I quadrant investor.
Okay.
And Robert Kiyosaki is a good guy, but he'd probably sue the hell out of me if I used his terms in my books. I didn't use that. I did the deal provider and the cash provider. The deal provider is the B quadrant business owner. The cash provider is the I quadrant investor.
Okay. Awesome. And what is your book called?
Raising Private Capital.
Love it.
Funny, Michael. You asked that. It happens to be right here behind there it is.
It was so funny.
Raising Private Capital. They can get it on Amazon and they can get it on BiggerPockets.com.
I was just going to ask. All right. So it's called Raising Private Capital. And without giving the book away, what can people expect to find in it?
Along with a lot of my personal story on how I got from guy that quit his job in 2005 to running a company that owns multi-thousand doors of multifamily real estate. It's got that journey in there, and that, but also it's got a lot of tools and lessons. It's a how-to really on how to look in your own personal network as an investor. As a B Quadrant business owner, it's how to look in your personal network to find the money you need to do deals, because you don't have to go to a private lender, or you don't have to go to hard money lenders. You don't have to go more corporate level or sell your soul to get the money you need for the deal that you're trying to do. You can look in your own network to find that money. And Raising Private Capital talks about how to find the money you need for deals in your own personal network.
Okay. All right. Matt, can we do something kind of a silly exercise?
Please.
Can you, because I think a lot of people are really nervous to have that conversation, and I think they feel slimy or gross. Can you pitch me on a deal that you're putting together as someone that would be in your kind of sphere of influence? And let's see what that sounds like and feels like.
Well, it depends if you're accredited or not, Michael, because if you're not accredited, we have to have a pre-existing substantial relationship. But if you're accredited, I can talk to you. I can do a Facebook ad that you notice, right? All joking aside, let's pretend you and I are friends, that we already know each other. You already like and trust me because I'm me, right? And my book recommends that those are your first targets, and that. So, hey, Michael, how you doing today?
I'm doing pretty good, Matt. How about you, man?
I'm awesome, man. Hey, listen. I happen to remember you saying that you were working over at company XYZ. You did a great job there, didn't you? It was good. But you had an opportunity come up at ABC company. And I'm really grateful for that you were able to move over to to take on that new job. How's it going?
It's going really well. XYZ was terrible. ABC is infinitely better. Thank you so much for remembering. You've got a killer memory.
No, it's great. That's what I do. But I also remember going further, Michael, is that XYZ, as much as you hated what they did, and I'm so grateful you got out of there, but XYZ had a great comp package. They did, as I remember, you told me they paid you a really great 401k program.
Yes. Yeah.
Remember?
It was pretty, it was awesome.
The stock market's been taken off lately, right?
To the moon.
Although it's maybe hit a top here and it's starting to get a little squirrely and everything like that. So I want to tell you that did you happen to know, Michael, you can take your retirement account and invest it in things not Wall Street. In that retirement account you have with XYZ company, because you don't work there anymore, that retirement account could be put to work in real estate. Did you know that?
I'd heard that, but I didn't really know that I could do anything about it.
Well, you can now that you've left XYZ company, right? You can take that retirement account that they have, and they probably were paying you in lots of company stock. Take the chips, man. Take the chips off the table. Cash in, sell that company stock, and roll that retirement account, which is now, by the way, was a 401k, now is an IRA. And you can roll that IRA over to a third-party IRA custodian, and you can do all kinds of cool stuff. You can buy, shares of companies. You can buy your own real estate investments. You can lend that money out, and you can also invest it in deals like we have. We are right now, Michael, buying 670 units in 2 states, 5 apartment buildings in 2 states. That's the deal we're in the middle of right now. Produces phenomenal returns. We're going to fix these buildings up, and we're going to refinance them over time. And as we refinance them, we're going to give some of that money back to you to your retirement account, so you can then take it and parlay it and invest it in other stuff. It's a great return. And a lot of people that we work with are really happy with the work that we've done as a company. So you and I should talk further. As a matter of fact, I have some IRA custodians that can handle this whole thing for you. If you'd like, I'd like to introduce you to a few of them that I love. And we do a lot of work with them, so they give us white glove treatment. Can I introduce you to them for you?
Yeah, that'd be great, Matt. Thanks so much for doing that. I appreciate it.
Yeah, man. And I'm going to email you the offering. And if you're not happy with if you don't like the returns I send you, or if you're nervous, whatever, that's okay. I got other things I can send you over to. But I really want to help you build your wealth while I build my business, because we're building a great real estate company. And our mission is to transform lives through real estate. And I want you to help me do that by me helping you earn money with your retirement account while we do the work. So we can do that for you. If that doesn't work out, that's okay. I have plenty of other friends through this awesome network called BiggerPockets.com. You should check out. You can look on BiggerPockets too and find other things to invest in, like private loans and other cool things I can show you that are not like that real estate that I mentioned. Even though that's a great deal, there's other things you can do too. And I'll hold your hand the whole way. What do you think?
Oh, sign me up, Matt. I'll be looking for your email.
Cool. No problem.
Man, that was awesome. That was so good. So first and foremost, you now got to send me that email because I'm sold. But secondly, what I love about what you did is the conversation felt very much, let me help you, let me provide value for you, educate me around what I could do with my retirement funds, which I might have not even been aware of. And then two, tell me how you're able to help me before even you being helped in the process, being able to do your own deals, be my financing was even mentioned.
Yeah. Well, here's a few facts, right? Of the $10 trillion that's currently in IRAs right now, not 401ks, just IRAs, of the $10 trillion that's out there, 4% of it's invested in anything else outside of Wall Street. And so if you're looking to get your capital game going, the easiest low-hanging fruit and the thing that everybody has is a retirement account that has, if they've got a job and they used to work at one company and they now work at another company, their retirement account they had, the first company, is now eligible to get rolled over to an IRA. And with the big run up the stock market's had, that's what you should be talking to people about. Is like, hey man, you used to work over here, now you work here, don't you? Or you got laid off, you quit, whatever it is. They don't have to have a job now. They just have to used to have a job. And it's such an easy, low-hanging fruit conversation, and it speaks to their needs too, because everybody's getting a little squirrely on where Wall Street's going. It's been a great run, It's had a great run over the last 12 years, but it might be time to pull a few chips back. So I think that's something that's probably the most underutilized conversation out there for those looking to raise money, is to talk to anybody that's got a job about investing in their retirement account with them, with their real estate company.
That's so good. I think so many people when thinking about having that conversation think, well, I don't know anyone who has money, because they might not be in cash assets or liquid assets on the, in a taxable account, but the retirement side of things brings into focus a whole nother option.
Yeah. Yeah. Well, you can, and there's other ways you can go about it too. You can kind of sniff out, and my book talks about like how to sniff out people that are in your network that likely have a lot of cash. What are the signs that a lot of cash leaves? My book talks about that. My book talks about, there's another vehicle that can invest with you. And those are people with free and clear real estate. Last time I looked, Michael, 30% of America owns their home, their primary residence, free and clear. 30%. Yep. But they don't, it's not like they paint the house a different color when it's paid off. It's hard to tell, right? Like all the purple houses in America are free and clear. No, you don't know, right? So, but my book talks about the signs to look for free and clear real estate. And I also can tell you, here's the free and clear real estate conversation. Here's those with cash conversation. And here is the retirement account conversation to have.
That's so good.
I just pulled that out of my playbook because it seemed like the most obvious one to go for was a retirement account. It's probably the most underutilized one, but I think it's the one that's most necessary right now in today's world.
That makes so much sense. Matt, you mentioned before we hit record here that you are actually in the midst of closing the biggest deal that you've ever done to date today. Yeah. Can you talk to us a little bit about what that looks like?
That was, by the way, Michael, that wasn't bullshit. That was a real deal that I was pitching you on for your retirement account when you were working for XYZ. Your XYZ IRA could be invested in the deal that we're closing part of right now. It's 670 units. It's in 2 states. It is 5 apartment buildings, and we're closing 2 of those today. The other 3 close in a couple weeks.
Amazing. Okay, and what attracted you to this deal?
So 2 of the buildings are in Winston-Salem, North Carolina, and that is a city we're already heavily invested in, and it's a city that's showing phenomenal growth, 14% rent growth last year, already on pace to do at least 12 this year, percent rent growth, and this owner hasn't increased his rents in the last 2. So he hasn't seen any of the rental upside that's been happening. The rent growth that's been happening in that market has not been realized on those properties. So great opportunity. We already have property management in that town lined up. And Lexington, we own 6 other apartment buildings. So we are a niche down company. We're not going to just invest anywhere that there's a good deal. We invest in super specific markets. So we're in 3 markets: Lexington, Kentucky, the Piedmont Triad in North Carolina, and Lancaster, Pennsylvania, of all places. Those are the 3 markets that we're in, and that's it.
If it works, it works.
So those are the things I like about it. I also like that it's diverse, meaning like it's different geographies, different management strategies, even different property conditions. I like all those things about it. That it brings a lot of things to the table that make it more of a stable asset.
Okay.
But a stable investment, meaning like stable here, but poised to go up.
Okay. And we've had a lot of folks on the show recently talking about passive investments and how you're really evaluating the operator more so than the deal itself. But can you give folks listening some tips about how to evaluate maybe the deal? I mean, what details of the deal itself should people be looking at to feel comfortable?
Yeah. You should look at, I'll tell you. Well, I'll tell you what people will do to make their deal look better than it really is. You got to look at what their exit criteria is. That meaning like they might be saying, okay, we're going to buy the property for this number, and then we're going to invest this, and then we're going to sell it for this, like nine times more than we paid for it. And you investors aren't going to make any money till we sell it, or you're not going to make very much money till we sell it. If the majority of investor returns are projected to come through the sale, and the syndicator is assuming that the market's going to stay very stagnant, that cap rates are going to stay down, interest rates are going to stay down, yada, 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 then they're kind of making a lot of assumptions that may or may not come true. So that's one thing to be concerned over. So make sure that they're conservative, that their crystal ball is that they're looking into has some conservatisms in it, because that's one thing a syndicator can do is they can predict that the market's going to be super favorable at some point in the future when they go to sell, and that makes the deal look really good.
Right.
Right. Yeah. Make sure there's some experience on the team that have been. It's okay to have new to work with new people because we're all new at some point, but make sure somewhere on their team there's a deep bench of experience.
That's great. Yeah, no, I love those points. Because I think I've seen that too in a bunch of syndication deals. Like, oh yeah, we're going to buy it at a 6 cap and we're going to exit at a 3 cap. And it's like, really?
It looks phenomenal.
Are you sure?
22% IRR, man. Like, what's the cash on cash when you hold it? Oh, it's only going to pay like 3% cash on cash. But magic fairy dust gets sprinkled on the deal, and it's going to get sold, and you're going to triple your money 3 years from now when I sell it. And that's how it's going to go. As they say, God willing, the creek don't rise, so. Yeah.
No, that's a great point. Those are great points, Matt. And I'm curious to know, what do you, and your book I'm sure talks about this, but for everyone listening that's thinking about starting to raise money but doesn't really have experience, they've got the hustle, but they don't have the experience and they don't have the capital. What should those people be doing right now?
Okay. Get as much exposure as you can. Some folks do that through investing. Some people that I know that are very successful syndicators now got started investing in other people's deals to learn the ropes, right? And that's to do that. Get some exposure, while you can, to other people's deals. Network, do what I did, which is start small. Like we're on our 15th, we're closing out. This is our 15th syndication that we've done. But our first syndication was a guy my wife went to college with, put in $50K into a deal that we did. We bought 2 single family homes with his $50K, right? That was our first syndication. So you can start small. Find the one person that has some capital to work with in your network and do a deal. And then expand it out to another deal, expand it out to another deal, expand it out to another deal. So for those that you're looking to get started, it's okay to start small. It's not sexy to start small, but it's also okay. And there's a lot further, there's a lot smaller distance to fall and a lot easier to course correct on a small deal than it would be to correct on a behemoth as your first deal.
Yep. No, I think that's such a good point. I know I've spoken to people that are like, oh, I want my first deal to be a 10-unit multifamily because multifamily is the best. Everyone's talking about it. It's like, yeah, okay. Well, have you done a single family deal? Well, no.
10, man. I'm telling you, I hear people like, oh, I'm going to do a 100-unit multifamily deal. That's my first deal I want to do. I've never done a deal before in my life, but I want to close 100 units as my first deal. I get it. And I want that too, for you. But you might have to bang your head up against a wall a lot, where you could just go and syndicate a duplex.
Right.
Or syndicate, like get your mom to go give you a couple dollars, and you and your mom will go buy a duplex.
Right.
But
then I can't post about it on Instagram. No one wants to see me and my mom doing deals.
I can't brag about that. I can't fake it till I make it then.
Right.
Or pose next to the Lamborghini that I just bought because I've been investing in real estate for the last 2 months.
Oh, so good. Matt, the last question I have for you before I let you out of here is, you were talking at the beginning of the show about how you did all these things and kind of ran all these different directions, and then you really niched down and you got really focused.
Yeah.
How did you do that? I mean, what did it take for you to get hyper focused? Because I think so many of us, as they get started in real estate, they're like, oh, I could do long-term buy and hold, or I could do flipping, or I could do wholesaling, or I could do BRRRR investing. And there's so many different ways to go. How do you know when you found the right one?
Well, first of all, Michael, I just got tired of getting my ass kicked, and I was like, okay, and there was one point, Michael, where I had 2 wholesale deals going on. I had 4 fix and flips going. I was buying a bunch of rentals and everything like that, and I wasn't sleeping a wink, and I was doing everything on a mediocre level. Any of those 3 things that I was doing, I think I was involved in some other stuff too. Any of those 3 things that I was doing could have gotten me to my financial goals, but the mistake that I made was doing a bunch of things mediocrely versus doing one thing really well, right? And so I found that I was, good at being a landlord, because with the landlord properties that we had ran very well. And I was also good at raising money and explaining what I do, landlording, in a very simple fashion to people. And so I was like, okay, well, I'm awesome at those 2 things. Let me just focus on those. And the more I focused on those, guess what, Michael? The more money I made. Money's good. I like making money. I do enjoy feeding my family. That's good. So how about I do more of those?
Yeah.
Not good at managing contractors because I'm too nice. I believe them when they tell me that their car broke down and that's why they couldn't show up on the job site, but they still need me to give them 10 grand, and I believe them. Oh, okay, here you go. So I didn't have people in my network to outsource that to at the time. And so it made sense.
Okay.
I had tried partners to run that fix and flip division of my company, didn't work out. So I needed to abandon the things that weren't working and focus on the things that were. And for those that are looking to niche down and focus, it doesn't have to be apartment buildings. Believe me, don't listen to Instagram. It does not have to be apartment buildings. It can be other things, I promise. But figure out what call it your core genius, right? Your God-given talents, whatever you want to call it. Find out those and how you can best bring those to the real estate table, and even better, how they are benefiting your business today. And then just easy, Michael, do more of that. How about that? Just do more of those things. If it's working, do more of it and less of the things that aren't. It could be that simple. And that's kind of how we grew in. And I found people that were able to sit in the seats that I needed for me to focus more on raising money and more on landlording. And I had filled in those seats and I got it, tight, and then I expanded up and I was like, okay, landlording is amazing, but I could probably scale faster if I outsourced that and hired third-party management companies. So we did that. I could focus on raising money, and I could focus on building the team and enrolling and inspiring and being a leader of my team. And now that's really all I do, is I lead my team and I raise money and I talk to you.
Oh, I love it.
Yeah.
I love it. Matt, this has been so much fun, man. If people have questions for you, want to reach out to you, are interested in investing in some of your deals, what's the best way for people to get in touch with you?
There's a ton of stuff on my LinkedIn bio. My LinkedIn is the Matt Faircloth. I'm sure there's plenty of other Matt Faircloths in the world, but my Instagram handle is the Matt Faircloth.
You've staked your claim.
I've claimed it. They're also the Matt Faircloth on Instagram. I'm the only Matt Faircloth, the Matt Faircloth. And there's a link in my bio on Instagram, and there's a ton of stuff there. You can go and invest and you can hear about investing in deals with us. If you're an accredited investor, you can join our mailing list because we do non-accredited deals sometimes for those that are that we have a pre-existing relationship with. So you can join that list or hear more about that. You can buy a copy of my book there. You can join all kinds of different cool things we have going on, and masterminds and webinars, all that jazz is on the link in my bio on Instagram.
Sweet. Well, Matt, thank you again, man. From Kimono Dragons to passive investing, this has been a blast. I'm sure we'll be chatting soon.
My family and I play a game at dinner called Two Truths and a Lie, and I'm going to slay it tonight in Two Truths and a Lie. I'm going to throw out there that I was on an interview, and me and this guy talked about Komodo dragons, and there's nobody's going to believe that. But I've totally got my family, totally going to crush them in Two Truths and a Lie tonight.
I love it. Well, glad I could be a part of it.
Thank you.
Awesome, man. Take care, man. Alrighty, everyone, that was our episode. A big thank you to Matt for coming on. It was super fun, from Komodo dragons to real estate syndication. I didn't think we'd be able to get there, but we kept it on the rails. As always, if you like the episode, please feel free to leave us a rating or review wherever it is you get your podcasts. And we look forward to seeing you on the next one. Happy investing.